All right, YouTube, we've got a highlight for the 5th of February coming in. Coronavirus is still driving this market. When there's press conference by the World Health Organization, you got to know about it. Created some weakness. We couldn't really have a relief rally till that press conference was over. So again, really important. A highlight of any day should be, is there a driver? What is it? When could you anticipate a headline? Is there headline risk? And you're not being surprised. If you're not surprised, you're in a good group. Subscribe to this YouTube channel so you get notifications on these videos. Now, today's highlight, and another guy in the room, Dave, brought it up. He said, look at the Russell and Dow. They were strong. When you compare, the only way you know strength from weakness is to compare it to something else. How do you know United Airlines is cheap going to New York compared to American Airlines? Because I go to Orbitz and it shows me they're cheaper, same destination, same day, nonstop, apples to apples. Russell and the Dow are stock indexes. The S&P and the NASDAQ are stock indexes. So if you trade a stock index, it makes sense to watch more than one, not trade more than one, but watch more than one. The Russell here on the left, the NASDAQ is on the right. The Russell on the left, the NASDAQ on the right. The NASDAQ was weaker after the open than the Russell. How do we know that? Well, we could see, number one, this trying to rally when this is trying to break, but also where they are on the map. They come, look at that swing high and how close they are to it. That's this swing high way over here, and look how far they are away from it. That's one way to understand if you are strong or weak. They're at the top of this range or at the bottom of their range. That should be, and when you learn from the right people, that is the way to compare contrast. Really important. Now, I couldn't get the replay to work, and if you use Sierra or any platform that allows you to replay, this is how you do it. I can get it to work. I tried to link it up so they'd play back at the same time. But Dave mentioned, hey, look at the Russell and the Dow. They're trying to make higher highs. So when the strong one gets weak, the weak ones get real weak, generally speaking. But you have to understand that analysis. So when you have the market in the Russell, look right here, go from 54 and start dropping 43.34, is there always a lead? And then you could take this NASDAQ and just sell it and life is good, it'll go down? Sometimes there is. At the very least, if it doesn't get you short, it could keep you from opening up a bullish or long bias and getting picked off and having a trade immediately go against you. How many people watching this video have had trades that once you put it on, it immediately goes against you, and you wish I just would have waited 10 seconds and I would have found a better location? And everybody who trades should raise their hands because it happens to everybody. How could you minimize that? Compare, contrast. You see the strong one get weak. This is a 20-tick sell-off in the Russell. And it wasn't in 2 seconds, but it was a short period of time that it broke from 54 to 34 and kept pressure on it. Keeps you from executing maybe a bullish bias, trying to find a bottom in the NASDAQ. You just get more information when the strong one gets weak. You got to know it's strong, first of all. You got to know it gets weak, which means you're paying attention. You're understanding the compare-contrast technique of market relationships. You're understanding that you have more eyes and ears on what matters. It's a part of what a good room is. Not just more eyes and ears on what matters. And what matters are correlations, ancillaries, where other markets you might not be aware of, but you're with a good group and says, hey, look at the bonds today. Look at the yen. Look at the gold. Look at anything that you trade relates to something else. So when you trade, if you're only looking at one market, you're not really trading. You're certainly not trading professionally. It does not mean you need to trade multiple markets, but you have to watch multiple things. If you analyze just the hell out of one, doesn't matter. It's always influenced by other things. That's why price moves. Since the invention of price, it moves based on the influences of other things. Apples to apples, apples to oranges. A stock like Apple, no pun intended, will get influenced by the overall index. Even if Apple's strong and the index is weak that it's in, and the space that it's in is weak, it's going to drag on it. It's something to recognize if you're a trader in Apple, or certainly in the NASDAQ. Apple represents 10% of the NQ. So compare, contrast, the only way to find value. It's the way they've been doing it since the beginning of time, not just in trading, but in buying and selling anything. And everybody listening to this YouTube video, even if you're not a trader, uses that technique when you buy and sell stuff. whether you know it or not. Nobody brings a Fibonacci chart or a profile chart into a car dealership to negotiate price. You don't do it. But you do know what other dealerships are selling that car for, even if it's not the same exact car. So make sure it's an integral part of your strategy. As you're building your strategy, as you're tweaking your strategy, as you're always fighting for better location. And that's what everybody should be doing, whether you are making $1 million a year or losing $1 million a year. And everywhere in between, everybody's fighting for locations. That's how you know you're getting better. You're reviewing, saying, is there a better spot? Sure, there could have been, or probably would have been. What did I miss? How do you know it was a bad spot? Because I put it on and I took 10 ticks immediate heat, or 4 ticks of immediate heat. It's all relative to what's a lot of heat to you. But if you take immediate heat, which is more than you like, more than you're comfortable with, then we're in a good location. What'd you miss? Because you got better. Always fight for location. Good luck, guys. Headline risk is still coronavirus until it's not.
One even.